Hi everyone, this is Joe LaGiglia with the Mortgage Message Show, and on today's episode, we're going to take you through the first-time homebuyer's journey. Hi everyone, and welcome to episode 7 of the Mortgage Message Show. My name is Joe LaGiglia, and today I'm joined with my guest, Wiesinger-Madlener of Oakleaf Community Mortgage. Hey Tina, how are you?
I'm good, how are you?
Doing so good. Thank you so much for being on the show.
My pleasure.
We've been friends for many years, and you've been a part of this amazing industry of ours in the mortgage industry for many years. Yeah. And today, we really wanted to touch on a topic that I think is going to bring a ton of value to our audience, which is helping the first-time home buyer go through the process of buying their first home. Are you up for that?
So important. Yes,
okay,
definitely.
Wonderful.
Let's do it.
So one of the things that I wanted to kind of jump off this interview with is there's so many new home buyers coming to the market. We know that rents continue to go up. Yeah. We know that the opportunity of housing has never been better.
Right.
And so despite all of that activity, education in the first-time homebuyer market is still so needed. So I want to start out by saying, in all of your years of doing mortgages, right off the bat, first-time home buying, what's one of the things that you could say to that first-time home buyer as far as, here's what you need to do to get prepared? What's one of the first things that they can do?
Well, first, I gather their information and I tell them, let's review credit. So I go over their credit reports with them. It's important. I actually just had a customer today talk about how her name was tied to her mom's, his was to his dad's, no middle initial, that type of thing. So that's super important just to have that dialogue with them to make sure that all the credit on there is theirs.
That's so good.
Yeah. And then from the credit report, then we'll kind of go over payments. This is what your payment looks like. And it's important to kind of estimate what the taxes are because that plays a big part in your payments. So I tell them this is the price range, this is the tax range, and this is where it'll get you to that payment. Then we also talk about assets, what you're going to need for closing, what the down payment's going to look like, what the closing costs are going to look like. Are you in a position where you need to get a gift from a family member? Do you need a seller credit to help offset some of the closing costs? Those are all things that kind of go into it and information I share with them so then they can make the best decision for themselves.
That's great. You know, for first-time home buyers, it's amazing. You, as a loan officer, talking to them about their credit profile, their income, and the money they have for down payment. Sometimes that's the first time anyone's ever had a conversation with them about it. Exactly. So it can be a little overwhelming. Right. I've always seen you do such a great job of building that bridge for them. You've gotten them to that point. Now that they have a really good idea of what their profile looks like, let's talk about, at that point, it's time to get them pre-approved. Once you have them kind of in the budgetary range that they speak of, what is the next step as far as issuing that pre-approval letter and kind of where they go from there?
Yeah, so it's important for myself to have the relationship not only with the client, but with the realtor, because it's all three of us working together once they're out there viewing homes. So they'll find some homes that they like. They'll send me a couple of addresses. I work up the payments for those. This is where they are. They look at them again. Once they find something they like, they want to put an offer in. I talk to the realtor, send her the parameters, shoot off a pre-approval letter, and then they're good to go.
That's great. It's so, in this competitive market too, it's so important those pre-approval letters are getting updated. Yes. I know I've heard you say it in the office, and I've said it where run every property by me if you're thinking you're going to make an offer on it, right? Yeah. Make sure they know about the payment. Yeah. So exciting. So this is a really big moment for that first-time home buyer. They actually have their pre-approval letter. They're out there looking at homes, and they go ahead and make an offer that gets accepted. Kind of talk about what happens at that moment in the timeline for that buyer, what they experience.
Yeah, absolutely. So once they have an offer that's accepted, the realtor will send us the contract. So we'll go over all the details of that, plug in all the closing dates, the earnest money, all that's on the contract. And then I finalize the loan application. I tell the client this is going to be coming to you via, electronic signatures. Here's the things you need to look for. Sign them. Once they're signed, I kind of button it all up and get it into processing.
So up until this point, we've had the entire profile built out, their credit, their income, their assets, and now we have a property address that kind of fills out that official loan application. Yeah. So great. So we have that built out. Our team sends it out to the client. They review the documents with you as the loan officer. They feel great about it. They sign the documents, and now they go into processing. What I want to focus on right now is, at that moment, what are some of the things that that the first-time home buyer cannot do
Right.
to ensure
Yes.
the sanctity of that loan process.
Yeah, and it's funny you asked that because I actually have it on my email, some of the things not to do. So every email you get from me, that's going to be in
You'll
bold
know.
red, bold red letters. But we talk about don't open any new credits, don't run up your credit limits on your credit cards. Don't change jobs. Don't put any large deposits into your account because every large deposit needs to be sourced. So there's so many trigger points that could cause a hiccup in the processing. So I think the more we educate them up front, the better it is.
I really like how you said that. And again, having worked side by side with you for so many years, I know you take such heart with your clients. They don't know what they don't know.
Correct.
And it's our job as loan officers to tell them. And I've heard you say this, and I've said this so many times, that in this new just say what it is, this new COVID world where people are losing jobs unexpectedly, it's so important to keep that moment preserved of when you were approved throughout the entire process.
Absolutely.
I think that's a great share. So they're going through the process. There's a lot of different documentation going back and forth. I know that we both always tell clients it's going to feel like they're asking for your, firstborn.
Exactly.
But continue to send in the documents. What's a big point during that process that they can expect to hear from their loan officer on in regards to kind of making sure that property's right?
So the next big step in that is honestly the appraisal. So they have the property, we're going to order the appraisal, the appraiser's going to go out there. Once we get that report back, we're just kind of looking, make sure value is there, make sure that there's no repairs that need to be done to the house. And if so, then they'll work with their attorney on fixing those.
That's great. A big question that's coming up right now, and I want to be super relevant to our audience because I just had one come up. I think you may have had one as well, where the appraised value did not come in for contract price. It's a question we get all the time, and I'd love to share the answer with our audience. What happens if an appraisal comes in not at the value, either too much or too little, of what the contract price is?
Yeah, I just had one, like we talk all the time, we have many of them. So I just had one that came in too low. And what happened in this particular situation is the buyer worked with the seller and they met in the middle. So the buyer had to bring in more funds. Now keep in mind when you're doing that, we need to make sure that we verified all of your funds from the get-go in addition to what you're willing to pay more for. And there are properties that may just appraise a little bit low but are still worth it. So you want to get that home. But bringing in that money, we just need to make sure we're verifying those funds.
That's great. I share with people all the time that in this really unprecedented moment in history, the pent-up demand in the moment of making an offer on a property, signing that contract, it doesn't always mirror the last 3 to 6 months of home sales. And so we find ourselves in this moment in history where that pent-up demand is driving up prices, but the appraisals aren't catching up.
Exactly.
So it's a great point you bring up for people to look out for. But let's be hopeful and say in this scenario, the appraisal comes in at contract price or better, and everything seems to be great as far as the appraisal and the property goes. And now we're almost clear to close. As the client's getting to the tail end of this process, kind of talk about that last week or so leading up to closing. It's where anxiety's at its highest, and it's where there's so many different moving parts happening. But if you can, take my audience through an example of leading up to that closing, what that process looks like and what a first-time home buyer can expect.
Absolutely. So once we get the clear to close, once your loan's been approved, there's going to be initial CD that goes out. That's going to be an estimate of what the figures are going to look like for closing. I tell people it is an estimate. We don't have anything from the seller on that side, none of the credits, things like that. So go over that. I go over that in detail with them so they feel comfortable. And then the next step, and they have to sign that just to kind of continue the process. And then the next step, a couple days later, a day or two before closing, they're going to get that final CD and they're going to see their true numbers. They're going to look at that, and then I talk to them depending on the dollar amount. Do you need a cashier's check? Do you need to wire funds? And what all that looks like, depending on the client.
So great. And I know I'm an 80s kid, so I know what CD meant back then. But for our audience today, who many first-time home buyers may not know, what does CD stand for?
Closing disclosure.
Beautiful.
Yeah, and I typed that out in my emails the first time around. Second time, I abbreviated to CD.
That's great. That's wonderful. I was kind of aging myself there a little bit there too. So, we have the closing disclosure identified. We have the funds to close identified. Talk to leading up to the day of closing. I know that there's a final walkthrough that happens prior to the closing, But as far as having that money there for closing, what's some of the things to look out for, some of the things to be concerned about, whether it's bringing a check or wiring it? What should a first-time home buyer be ready for as far as getting those funds to the closing table?
Yeah, well, talk about being in COVID times. It's a little bit different right now because a lot of banks don't allow you to come in. So, and if you need a cashier's check, you may have to make an appointment for that. So a lot of times it's just important for them to get that information, even if it has to be an estimate at that time, get into the bank, make your appointment, get the cashier's check. So when you're going to closing, you have that in hand, you're going to give them that, you're going to get the keys in return after you sign your life away, and then everybody's happy.
That's so great. So we have the closing, and still to this moment, you brought up a great point, being in COVID times. I know you're someone who always loves to go to the closing to be able to support your clients. A lot of title companies are only letting the attorney into the closing in this moment. So we are there to celebrate with them, either virtually or in person. After the closing, they receive that big stack of documents after they sign their life away. Talk about what is some of the expectations. And I feel like this is a little bit of a conversation that gets left out a lot when it comes to loan officers talking to first-time home buyers. After that closing, what can they expect for the next 30 to 45 days, whether it has to deal with their first payment or otherwise? What's some of the expectations they can look at to forecast on their radar?
So first of all, in the packet that they've signed at closing, there's going to be a first payment letter in there. So if you don't receive your mortgage payment for that first of the month, you always have that to fall back on. But watch your mail and call your loan officer anytime you have a question regarding that. If you didn't receive your payment, make sure that it's coming. Make sure you're paying the right person, if you get any letters, things like that in the mail. Another question I get is the tax bill. So the tax bill is going to come, and you think you have to pay that whole tax bill. If you're escrowing your taxes and your payment, that's just for your records. So a lot of people are like, do I have to pay this? Have I paid it already? It's been paid. It's in your payment. You're good to go. So that's another important thing for them as well.
That's great. That's great. I know that I've gotten that call so many times, and I do enjoy getting that call because I get to tell them you don't have to pay a bill, and everybody loves to not have to pay a bill.
Absolutely.
Tina, it's such a breath of fresh air to have you in our marketplace as a loan officer. You bring such integrity to this business of ours, and I think if someone who's watching is interested, and this is a platform that I want to lift you up in. If someone's interested in sitting down with a really knowledgeable, integrity-based loan officer, what's the best way that someone can get a hold of you?
Yeah, they can call me on my cell, 815-600-0945, or email me, tinam@myoakleaf.com.
Fantastic. Tina, thank you so much for being on the show. We'd love to have you back here soon.
Definitely.
And we'll get through this crazy year eventually and be able to take a breath here soon.
Yes, exactly. Thank you, Joe.
My pleasure. And to our entire audience, thank you so much for tuning in to another episode of the Mortgage Message Show. We hope you found a ton of value within this episode. We'd love for you to share it with your networks. We'll see you next week, everyone. Take care.